everybody, welcome to Monday Morning Must Knows. My name is Merlin Rothfeld, and here are several things to pay attention to for the upcoming trading week. Now, on last week's Triple M, we focused on the CPI number coming out on Thursday, as well as the major financial earnings announcements happening on Friday. And almost every single bank that reported on Friday beat earnings, but the market didn't react so positively. We had kind of a mixed bag out there with those earnings. So we have a lot to talk about with regards to earnings. Let's get started right there and right now. Moving on to our earnings calendar, there's only 134 companies reporting this week, and it doesn't seem like a lot, but there are some major heavy hitters out there. Now, Monday, you really don't have anything going on, but on Tuesday, more financials: Goldman Sachs, Morgan Stanley, Interactive Brokers, Citizens Financial Group, and United Airlines. On Wednesday, you have Charles Schwab, PNC Financial, Discovery Financial Services, Kinder Morgan, Alcoa, and JB Hunt Transportation. So again, multiple segments represented here. Thursday brings you Netflix, American Airlines, Proctor Gamble, and Fastenal. And on Friday, you think we're done, Ericsson, Schlumberger, Ally Financial, and Huntington Bank Shares. So this is a pretty big run of earnings announcements across multiple sectors with some major names out there. And given the way that it was kind of a soft response to the very positive earnings by the financials last Friday, makes me a little pessimistic about this earnings season as we just started to kick it off last Friday. Now, we talked about CPI on last week's show, so let's focus on that because we have another piece of that coming out this week, which is going to be the PPI numbers. Now, just as a recap, let's look at what actually happened out there. Last week's CPI number was in line with expectations at negative 0.1. You can see over on the hard right edge. The good news is that what that is showing is that inflation month over month has declined. Now, that does not mean that inflation is over and it's all roses from here. It just means that right now, month over month, we saw a 0.1% decline. We still have 6.5% inflation. Around that, depending on which metric you look at. But all in all, it's a very positive sign that inflation is starting to decline. Now, that was last week. If we focus on this week, we have PPI numbers coming out Wednesday at 8:30 a.m. Eastern Standard Time. And you can see the chart looks somewhat similar to CPI above it. But what's noteworthy is the previous reading was 0.3. And you can see that on the hard red edge right here. Now, the expectation is that we're going to come out at a negative 0.1 as well for PPI. Now, this is really good news for any of you who are looking at the macro picture and looking at what the Federal Reserve might do. We've talked so much on this program about how inflation right now is really dictating what the Fed is doing. Fed has been super aggressive in raising rates at an alarming rate almost in an attempt to fight inflation. But if inflation starts to drop, then maybe the Fed starts to backpedal a little bit and maybe even pivot and start cutting rates if things start to look real good. Now, we're not at the pivot point yet. Don't get all excited and don't think, hey, Merlin said we're pivoting. Not yet. But we may see something this year, and here's where we can get the reading of that. When you look at the Chicago Mercantile Exchange, there's a document that is called the Fed Funds Futures. Now, this is a product that is traded by institutional traders. And the probability for our Fed first meeting, that's the first official FOMC meeting, is going to be on February 1st, is expecting there to be a 93.6% chance of only a 25 basis point increase. If you go back, and if you notice down here at the bottom of this chart, a little red box I'm putting up, that shows you kind of historical timelines. You can see 1 month ago, 1 week ago, 1 day ago, and currently what we are today. Well, the very top line that you see there in the red box says 57.3%. That means that a month ago, we had a 57.3% chance of the Fed funds rate increasing 25 basis points. Well, now it's 93. And you can see there was also a 37% chance of a 50 basis point increase. Now that's only 60.4% and no chance anymore of 75 basis points. Now, why is this important? Because it means that the expectations are that the economic data is starting to come in much, much better. That maybe, and I say maybe with big quotes, asterisks, whatever you want to put on the screen, maybe inflation is under control. Now, I know for any of you out there trying to buy a dozen eggs right now, you're going, there's no way inflation's out of control or in control. It is out of control with regards to eggs, but gas prices have come down and a lot of other commodities have as well. So that's impacting tremendously the inflation data. If this trend continues with CPI, PPI, and the core PCE price index, and we continue to see negative numbers as far as inflation, then this could change even more for the next meeting coming up in about 6 or 8 weeks. So very important because this is what's driving this market right now is what is the Fed going to do? Now, our last piece of news here for the week will come out on the same day, and that's retail sales. Some of this is rather, I will say, not disturbing, but confusing to me personally. I hear so much about these record sales numbers that happen for Black Friday and the holiday season was just tremendous shopping. Everyone's spending money. Well, if you notice over on the hard right edge, you see it says negative 0.6. Right? What that means is for the month of November, we saw retail sales decline to the tune of about 0.6%. That's not good because in November, that's when you expect things to be surging, right? This is when we have Black Friday. Business should be booming and sales should be off the charts. Well, the upcoming number, which should reflect the numbers for December, are going to be released on Wednesday at 8:30 a.m. Eastern Standard Time. And again, you would think that these numbers would be rather positive. However, the forecasts are for further contractions in retail sales numbers. Again, the November number was negative 0.6. They're expecting the December's number, which will be released on Wednesday, to be negative 0.8. So we have some good news out there with CPI and the Fed funds futures, but the retail sales are showing demand declining. And of course, that is part of the reason why we're seeing inflation subside. If people stop spending and buying things, that stops driving prices up. So this machine that we call the financial markets is certainly going to run however it is going to run. But by focusing on this data, focusing on inflation numbers, focusing on interest rates and retail sales and GDP and all these macro pieces, we can start to craft out a plan that may take advantage of these fundamental shifts in the economy going forward. That, my friends, is your Monday Morning Must-Knows. We'll see you next week.